Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Friday, June the 5th. Let's quickly jump to our news items for this morning. We're expecting the unemployment numbers to come out in a couple of minutes, the average hourly earnings, the non-farm employment change, and the unemployment rate is expected at about 19%. So, it's going to be interesting the reaction that the market's going to have. I think the market's already taken that into consideration, but it'll be interesting to see the initial reaction. This may be happening as we're doing our analysis this morning, so that'll be really interesting to watch it together. Let's quickly jump to our news, to our daily chart for today. Market continues its relentless continuation to the upside, trying to reach the all-time highs again. It's incredible how it keeps breaking through these key support resistance levels. Here was a key support resistance level. Market attempted to continue through there and hold support. Market it's just unbelievable what's happening in the market, in spite of what the situation looks like, in spite of the things that are going on here in the United States in reference to the economy having been shut down, slowly turning it back on slowly but surely. Everything's reopening slowly but surely. We have the rioting and the protest outside. I think the market is using that as, unfortunately, the rioting and the looting as if it was a natural event like a hurricane or a tropical depression that it created a flood or a temporary situation, because it's not expected for this to continue much longer. So I think the market really discounted that. I think if the market is just keeping its eye on the fact that the economy seems to be slowly coming back to its normalcy, life is coming back to its normalcy, and the type of sentiment that we have in the market is a natural reaction considering what we've been through for the last couple of months. So we continue to see, buying the dips. We continue to buy the dips unless we break through key areas. I'm going to show you some of those key areas in 1 minute here. And as we move into our further analysis, we can see here, this is another time frame that I enjoy looking at. It's an 8,000 tick chart here. And I like this chart because it gives us the bird's eye view, a much clearer bird's eye view, bird's eye view of here's our technical channel. Market is bouncing between that channel, respecting that channel. It's pretty much just bouncing between there. So that's exactly what we're expecting the market to continue the same behavior. Nothing has definitely changed, even though things are fluid. I think there's a lot that has been known. There was a lot of unknowns going into this, a couple of months back. I think there's a lot of things that are known already. And I think the market is just taking those things into consideration. They're thinking this is where we were before, this is where before this happened, and this is where we want to return to. So the market continues to show strength to the upside. The report should be coming out shortly, so it should be happening right within there it is. There's a reaction to the market, the market reaction to the news. Here is our compression. We had a clear compression here above yesterday's pre-market. We had a compression here from our intraday high. Market breaks clear through, and the pre-market comes back, tries to retest, falls a little short. We're compressing between these two areas. Market decides to break higher. Now it's finding a little bit of resistance here. See how the market will continue. And according to the report, 2.51 million jobs were added in May. So it's beginning to do a little bit of a reversal here. So we're adding rather than contracting jobs, and the unemployment rate, which was expected at over 19%, came in at 13%. So it's definitely a lot better than we had expected. And this is just more confirmation of why the market is exuberant to the upside. Again, everything's been discounted, so that's why the market continues to expect things to get better. I think the market believes that it hits the bottom, and we have hit the bottom. Now the market just wants to continue to reach its continue in the direction that originally was moving before all of this happened. And again, there it is, our clear compression clearly broken, and the market is attempting to move higher. So as long as the market remains above this blue line here, this is like our last. We're expecting to continue to buy the pullback, especially if it holds this support now. Especially if it holds the support here, we're expecting to just buy the dips. And of course, it can break down all the way down to here. This will be our second area of support, and expect a continuation. Otherwise, the test is going to be coming here. Any break below this, we're expecting much more deeper runs to the downside. As a matter of fact, we do a Fibonacci from the intraday low to the current high. This is our 38% retracement, so we can retrace way down, all the way down to here. At this point, somewhere along here, we can still expect the movement up, but if it breaks these two key lines here, we can go short at least to these areas here. So take care, be safe, and have a great weekend.